Well, we had the break and we had the rally, and now we have a lot of breaks and a lot of rallies, folks. A lot of chop in this market and a lot of news to cover, some good news, some bad news. We do have earnings. We do have Oracle out with earnings. So we're going to focus on the Oracle earnings reports, some related trades to that. We're going to talk about talk to Stephanie Link at 8:35. She's hanging in there. She still likes this market. Also, we'll do some ratings. Folks, it's hump day on pre-market.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Okay, good morning, traders and investors. Let's do a quick rundown because we got some breaking news on Nebius and Nvidia. We're down 5 handles, just chopping around. Let's see if we can just hold in this area today. The buck showing a little bit of strength, up 15 cents, but your TLT slightly in the red. USO is flat. Now the futures may be indicating a different story. GLD in the red, 205. SLV in the red by $2. Bitcoin in the red by $700 as well. These charts are brought to you by TradeStation, Board to Trade. Chart, analyze, customize, all in one platform. Trade smarter, move faster. Stay in contact with the market through TradeStation. All right, let's bring Dennis on real quick. Let's go to some breaking news here.
Yeah.
NBIS gets a vote of confidence. Hey, Brent, how you doing today?
Hey, good morning. Just breaking at 8 a.m. Nvidia and Nebius partner to scale full stack AI cloud. Nvidia will invest $2 billion in Nebius, reflecting Nvidia's confidence in Nebius's business and unique depth of engineering expertise across the full AI technology stack. A reminder, folks, away from Nebius here for a sec, that back on March 2nd, couple weeks ago, Nvidia also invested $2 billion in both Light and Coherent. So we have a trend. If we didn't have a trend on that day, we have a trend here now where Nvidia seems to be going around putting its money in a bunch of different pots here.
And Nvidia obviously still has the Midas touch. We know there's been, some obviously OpenAI headlines that haven't been moving stocks in the last month or so, sometimes even to the downside. Not Nvidia. Nvidia still touches you. The Midas touch works again. Nebius, stock we've been talking about in the Stock Trader Network room for a long time. I got asked again yesterday. I said, I like Nebius. I don't own any. Can't own everything you like, but I do like the stock here. It's popping, obviously, this morning up 8.8%. We're still in this chop suey market here, though, so it's hard to come in here and chase stocks. This news is just breaking here. Joel, maybe give us a quick level here, and then we got to get to the macro headlines.
Yeah, I'll give you a level. I just want to say, we've been going over the 13 Fs, and now, Warren's kind of stepped aside a little bit, and Ackman, he's doing his IPO and stuff, but it's been like Nvidia. What are they doing in the market? And they've been the movers and the shakers. We got a nonstop bid right here in NBIS, as exhibited here by the 1-minute chart. We'll blow it out a little bit farther here. Go to 15-minute, and I'm just going to look on the dailies. I'm not seeing any cluster of highs until the 108 area, but who knows when this market gets momentum, gets going in one direction. You know how these algos like to work. So we'll keep it going. We'll see. We'll check on it in a little bit. But you did have 4 highs under 110. If you're a whole number guy, you may want to hold out for 110. But see if the rally can continue. NVDA. Let's see how the pre-market action, and that's not moving as much. It did get a pop, and now just kind of holding steady here at 185.
All these stocks were moving off of Oracle's news last night as well, but now they all continue to pop. So obviously Nebius getting the positive Nvidia headline here. There's a lot of peers to talk about here. IREN, that's trading up 2.2%. I always talk about Corz, C-O-R-Z, CoreWeave, C-R-W-V, up 4.6%. Corz up 2.26%. Big pops here. Sympathy moves here with NBIS. These are stocks that I do pair trade together too. They do tend to move together.
And
Corley's interesting. I mean, we talked about this when somebody asked us yesterday too. I kind of like it down here too. I mean, valuation on these things is the problem, but the business here is sound.
Good old Feehan in the pre-market show is like, when were we going to get back to talking about AI? When were we?
Look at this. Nvidia saves the day. We don't even mention the war here. 6 minutes into the show, back to AI. We'll mention the war here in a second. Maybe we should. Is that where we're going? Updates here from the macro.
We gotta give the updates. Yeah, it's
give
the market focus. And folks, just a little heads up. I'm having not a great connection this morning. There was a bunch of storms in Detroit last night, so apologies if there is any lag. Yesterday we heard from Pete Hegseth that yesterday was going to be the most intense day of bombing Iran. The market really moved later in the day, just after, I believe, 2 p.m. Eastern time, when we heard about Iran potentially mining in the Strait of Hormuz, underwater mines. Major price action in SPY and oil on that. And overnight and this morning, we heard Trump say the U.S. blew up 10 inactive mine lane boats. He said that they were going to destroy any boats that were seen as laying mines in the Strait of Hormuz. Oil here this morning, around $80, $85, $86, $87. It's just chop. I look at the chart.
Wow.
Chop. It's more chop.
This is the name of the show, and it's the name of the trade, and it's the name of the last week, really. Chop Suey. This is where we're saying sell rips, buy dips, short rips, buy dips, however you want to play it. Somebody was mentioning to me that you can't, sell the rip if you don't own the stock. I'm like, you absolutely can. It's called shorting. Yep. So, I mean, when I say sell, even in IB, there's a buy button and a sell button. That is it. Did you know that in Interactive Brokers? There's no short button. It's buy or sell. So when you press sell, if you don't own it, it marks it short for you automatically. It just looks at your portfolio. There's a lot of, professional systems that are like that. They never used to be like that. You used to get way back in my day when I first started trading. Remember, you get a marking error. And you get a marking error and you can get fined for that, where, oh, I marked it, sell, and I meant to mark it, or I didn't, or sell short. I mean, now it does it all for you. The systems are so good. But this has been the trade. It's been just selling rips, shorting rips, buying dips. I mean, it continues here. We pop up yesterday morning. Everybody's running and gambling and buying stocks. Like, yeah, green light, go. And then you get, the news of the mines, like Brentster's saying, and stocks sell off in the afternoon. And overnight, it's been all over the place. We were down a bit, then we were way up. Now we've given it back. Chop Suey.
And also, we had headlines that the International Energy Agency has this oil release from the Strategic Reserve. This was a WSJ report late last night. 300 million to 400 million barrels could be released from the Strategic Reserve. Oil and the stock market are still very inversely correlated here.
Completely. And again, this will not last, so don't marry this relationship. But right now, we're dating this relationship. The market likes to, marry long-term relationships like oil and airlines. That's a marriage, the inverse relationship there. The inverse relationship between oil and the stock market itself is right now, it's just, they're dating right now because it's not this algorithmic, but it really is right now. We saw oil start to rally back a little bit this morning, and SPY immediately sells off. So it's almost perfectly inversely correlated here right now, at least on a short-term trading basis.
So where does like the in all this chop suey, where does like the VIX discussion fit into this? We have a VIX right now. If you look at the VIX, it's around 25. Just for a little perspective, on Monday morning, we were up around 35. That's definitely elevated. Dennis, you were given a couple like notable levels. Like you said under 20, you said between 20 and 30, and you said over 30. Will you go into that a little bit, please?
Yeah, so under 20 is like normal time stock pickers market. When you start getting a VIX over 20, all stocks start to move together. So 20 to 30 is elevated risk, elevated macro risk. You're seeing stocks kind of move together. It's not so much of a stock pickers market. Above 30, stock picking ceases. All stocks just start moving together. It becomes crisis time where there's some type of crisis going on. We know right now it might be the war. So when you start getting above 30 and into like 40, which you saw during the financial crisis, believe it or not, it got up to, I think it was 70. And then during the quick COVID crash, I think we hit 90. So, I mean, when you're at that point, all stocks move together. Coke will move down 2% because the S&Ps are moving down 2%. It all starts moving together. We're not in that at all. When you're in 20 to 30, you're a little bit of stock picking still. You'll still see staples trading higher on weaker days. We start getting over 30, staples start going down with the overall market there too. So that's, how you gauge the VIX. Where are we heading? I mean, we don't know, but the VIX never, Joel, you made this point, the VIX never stays elevated for that long. If you're buying long-term VIX calls, you're usually losing money because crises are short-term. And the market likes to be at a VIX, 15, 14, 16. That's kind of where its happy home is. Eventually you come back to there when geopolitical risk or the macro risk starts to go down.
Yeah, no, it's great having CC on the Stock Trader Network a couple times a week, and he was just like when we had these rallies, and but the VIX, he was like, if this rallies we should be coming in more in the VIX. We should be coming in more in the VIX if this is sustainable. And then you get the spikes down, and then as you said, Dennis, I mean these rallies, 60, we were under 6,600 just on Sunday. These 150, 200-point rallies, they just destroy the VIX. I mean, they suck.
Oh, they do.
Yeah.
They bring it back down.
Yep.
I mean, it's a fear gauge. Really, people use it for the fear gauge. It's obviously done all through options, but it's really a fear gauge. And when you see the market start rallying again, obviously fear is subsiding. But we're kind of just in chop land. So the VIX at 25 kind of feels like right to me for this environment because we haven't crashed overall. I know there's been some individual stock crashes, but overall the market's held up fairly well. At least the S&P has, and the Qs have too. So it kind of feels like we're in the happy spot. Where we go from here, can we elevate over 30? If there's, a major, if the war escalates, yeah, definitely in the cards. Is it, want to always drift downward? It does. We become numb to all headlines. Like even in these Iranian headlines, if this war continues and we're a month from now, we'll be more numb to the headlines. And it's sad to say, because people are dying, obviously there's real world implications here. But from a stock market perspective, it always starts to numb towards the same headlines after, so long. We're not at the numbing stage here yet. We're very sensitive. Oil's very sensitive to a lot of headlines that are coming out over there. But eventually, if the war does continue, don't think if the war goes on for the next year, that the stock market is going to continue to remain elevated, the volatility. They will numb to it as well.
It just I have my own personal VIX, and that's like the S&P, and looking at the average daily ranges and stuff, and been around enough to see those average daily ranges, sometimes 15, 20 handles. And then you got the COVID times or the financial crisis, it's 200, 250, 300 average daily ranges. But what I look for the most is the trend, and I use the 24-hour market. The ranges have been getting bigger and bigger and bigger. So what I like, I want things just eventually calm down,
Yeah.
And in this market environment,
I mean, as an investor, you always want the markets to be calmer. As a trader, I love the elevated volatility. I mean, you're getting so many opportunities to just play chop. And again, I'll keep continuing the strategy. People don't know how to trade this stuff. The way you trade chop Suey is you don't chase anything and you fade everything. What's that mean? When you're rallying up 100 handles yesterday, you're taking profits into that. Maybe you're shorting. Maybe you're waiting until we start leaking. Maybe you're waiting for a headline to actually short. But I mean, if it's the timing of everything's always, critical here. You're never going to get everything perfect either. But I mean, even to, the headline 2 days ago, I mean, we start buying up 666, 668, 670 on SPY. Well, you start a little intraday trend there, and then bang, all the way back up to 683. That's major freaking resistance. Anything above 680 is major resistance on SPY now. So that's a time to unload everything you just bought or potentially start initiating shorts. And if you're doing that, then you're making some money too. You're never going to get it perfect. You're never going to get the absolute top. You're never going to buy the absolute bottom. But there's a lot of meat in the middle. Let's go to Oracle.
All right. Oracle.
Awesome. Oracle, here's the news, folks. Oracle with the quarter reporting $1.79, nice beat, versus $1.71 sales, also a nice beat. 17.2 billion, analysts at 16.9. The guidance was solid. They're expecting Q4 earnings $1.96 to $2. Analysts around $1.96. Sales were also like kind of in line to a little better than expected. They raised their 2027 sales guidance. I think they had been previously giving it like a percentage growth, like 20%, I think they said, and now they're giving a number to it. 90 billion for 2027 sales. Analysts are down closer to 86 billion. They also did reaffirm their 2026 sales guidance, and I think importantly, their CapEx spending, which I think, let me see if I can find it in the press release real quick here. They're very worried about that. It was sorry, should I had this ready? It was 50 billion CapEx. They also did comment on the capital funding. We announced in February our intent to raise up to 50 billion in debt and equity. Within days of the announcement, Oracle raised 30 billion through a combination of investment grade bonds and mandatory convertible preferred shares, and they called that substantially oversubscribed. They said we have not yet initiated the at the market equity portion of the financing program. Those were 2 or 3 things that I mentioned in there that the street was very worried about. And just the fact that Oracle mentioned them, whether they're good or bad, just the fact that Oracle mentioned them, I think is notable. It shows you that management is tuned in, at least to what the market is thinking.
I think, the bar was definitely low here, but there was a lot of relief in a lot of things that they said, because people have been worrying about the CapEx spend. People have been worrying about where is it going. People have been really worried about this company. I mean, has it overshot to the downside? Very possible. I mean, we probably massively overshot when the stock obviously, or went up to $300 a share. It's back down here 149. Now it's 164. Overhead supply everywhere here. It's not going to be smooth sailing back to 200. I know Guy Dom is saying, "Oh, it could go to 190 on this." I think it's just too much overhead supply. Too many people have been crushed on this, so I don't see that happening. Not quickly. I mean, as a long-term investor, it's place your bets time. Do you believe Oracle's going to be a major player in AI and going to figure this out? And this CapEx worries about excessive spending shall pass. Then you're buying Oracle here right now. But as a trader, who knows? I mean, where this goes tomorrow, where this is going, it's really difficult. But I do know there's a hell of a lot of overhead supply.
There's definitely, and
Yes.
I'm part of that AI trade, right? The part of that oversupply. Another thing that they mentioned in there was the debt, right? And selling the debt. That seemed to go, they eased the fears a little bit over
I
that.
think so. Yeah,
Let's just look at it. We had a consolidation, break lower, consolidation, break lower, another consolidation period. All right, is this for real? A lot of overhead supply. Let's just get technical. Let's say, hey, first we got to clear the 50-day, then we got to clear the 200-day as they're now inverted. Keep an eye on your pre-market high. What I like to look for, longer term, I mean, we've seen some of these stocks get pops on their earnings and then just fade away just quicker than you could say Jackie Robinson. So longer term, I like to see this come in and build a base at 160, work its way back towards the 180 area. Important day for the market. Important day for Oracle. I just don't know if sometimes market dynamics. I mean, this will be a strong stock today, hopefully. Yeah. If the market completely falls apart, then that thesis completely falls apart. So you got to take a little bit
I think it's fine
market
for now,
dynamics.
and I'd probably be a buyer of dips on Oracle for now. With knowing that this stock obviously is still software as well. So let's just talk about that for a second, because the market had a pretty good day yesterday for the most part, even the day before. Software is not having a good time right now. So yesterday, we clearly saw the theme that I've been talking about is hardware was very strong. A lot of hardware names were up. Software names could not catch a bit at all, and a lot of them were down significantly. ServiceNow had a bad day. Salesforce was doing some of the buyback, and they were announcing and trying to do some positive commentary there. It was trying to hold up, but really wasn't. Microsoft really wasn't having a great day either. IGV not having a great day either yesterday. It feels like the software rally that we saw for the last 2 weeks is petering out. At least it's exhausted at this point in time. Software was massively oversold at the middle of February. Now we've had a 2-week rally here. It's kind of not necessarily overbought, but it's a little more balanced here now. And then you're back and you're like, well, we don't know what AI is going to disrupt here. So we're back to that again. So just know that Oracle still falls into the software category. That's one thing to worry about if you're long Oracle.
Yeah, before we go into the peers, I just one general thing. And maybe we'll just go broad here, go with the IGV, and you get every move has a counter move, right? I mean, there's always a bounce. So now, if you're thinking that you did put in a long-term sustainable low in something like IGV, then you could just look at this as, okay, I want to buy the dip here, right? And you can look at this, you can use identifiable levels. This is a substantial rally, folks. There's no other way to put it. So for the IGV, for this to go from 78 to just 88, you come back to this 82 area, 83 area. Does it find support? Does it not come back down to this area? Buyers are just too anxious to, they felt they missed the bottom here. So you could apply this to IGV. Oracle, you don't know what the, short-term high is going to be, a little bit harder. Same thing for CRM. Is this a pullback to buy? At least you have an area. And if you're a super long-term investor and you're convinced that the software is not dead, then you have a major level, to lean on, hopefully to get back a lot of losses.
I mean, that's the conversation here. Software is as cheap as it's been in a decade from a PE perspective here. Some of these stocks like Oracle, again, Oracle's, I know profitability is going to be an issue here going forward because of the AI spend. But, I think when you're looking at software in general, for the most part, a lot of these companies have come down to PEs that we haven't seen in a very long time. So if you think that AI is not going to disrupt software as nearly as much as the market thinks, these stocks are all buys. I don't know if anybody has the answer to that. So I hear both arguments and they're both strong. The moat we talked about, obviously, Rahit talking about this, in our chat, and looking and saying the moat's so big for some of these companies, it's not going to be as simple. You got all these relationships, you've got, a lot of reasons to think that these software names, Salesforce, Benioff is telling us continuously his company's doing as good as it's ever done. So, ServiceNow, Bill McDermott, same story. He's going out buying his stock in the open market because he believes that, the market is dead wrong about pricing out software. That might be correct. That view may end up being correct. And then there's also the countering view, that AI is going to disrupt so many industries and software is just an obvious guy trade to disrupt. And that's why, you've seen these stocks like ServiceNow just relentlessly get sold, even though the earnings were fine. So I don't know who's correct here. I don't know if it's like overblown, the AI fears, or if it's not, and these companies really are going to get disrupted. It's really tricky right now. We're at a stage where it's place your bets.
I want to give a heads up that we are going to be getting our CPI reading in about 6 or 7 minutes at 8:30. We'll give a quick little preview, but I just wanted to touch on the peers that were moving on Oracle. We were kind of wondering last night in the SCN room, is Oracle going to move the whole market? And we were kind of going back and forth. The ones that we know they always move with Oracle are the hard data center names, like a Nebius. We mentioned those ones. An interesting story here, I think, is the optical fiber optic names. These names have been getting a lot of attention lately, like a LIT, Lumentum. Like a Coherent was a huge mover last night on the Oracle earnings, COHR. Ciena, CIEN. I'll pull up Joel's charts here. There's also some laser names in there, like a LASR.
Yeah, those stocks have all given it back here this morning. So the optical names are not having a great morning here. They were well and strong last night, and they have now leaked away gains. Coherent was on Mad Money, had a huge pop. What Jim was talking about it, that appears to be the top because now, the stock has just turned around from where it was trading at last night, Coherent, and it's down about $15 from where it was trading last night, or $13. So that has turned around and given it back. So we're still seeing this same thing, that we're seeing a very large appetite to sell the rip. We're seeing it again and again and again. We're seeing it even in good reports. We're seeing it just, across the board, really. Like there's been pockets of stocks, but even Dell, which blew it away, Joel, and then went up the next day. It's starting to leak here again now. Like I popped back a little bit here from yesterday's sell-off, but I mean, you've had some stocks that just have had fantastic reports, and then they leak away the gains here. And that's a testament to the macro tape and the uncertainty that we're in. You were mentioning this yesterday. The market hates uncertainty. The market hates uncertainty. What does it do? It sells winners. People will always sell a winner. You taught me this back in 1999, Joel, when I first started trading at the Bright Trading Office. You're like, when a stock is going up, there's always a seller still. When a stock's going down, there's not always a buyer. And that's so true because you have people who are long and people very much have an appetite to sell winners, and they don't like selling their losers, So, obviously, when a stock system free fall here, people are holding on to those. They're not, sometimes they panic and they sell. But, there's all momentum traders in this market. William O'Neill has changed the markets forever with his book, which was fantastic. It's created so many momentum traders, so many momentum algorithms. We talk about momentum ignition and all that. This just is the market that we're in. So when a stock loses momentum, it's hard to get its mojo back. When the stock's moving up and it's above the 200-day moving average, there's always willing buyers there because you have so many momentum traders that exist in this market. There's not that many contrarian traders left. Me and Joel are two of the few. But I tell you, I love this environment when you're getting this chop because this is the kind of environment that I excel in. I've always been more of a contrarian than a momentum trader.
A few Dell traders out there. We got a good level. Let's see if you want this rally to continue. Forget about that blow off high on the second day after earnings. Pair of highs, just under 147. So big boys out there at 147. If you want to see this thing back at 150, you keep an eye on the sellers at 147.
A stock that has went from bliss to PISS is AVAV. Give us these numbers here, Brent. The stock was just loved here.
AeroVironment reporting Q3 earnings, 64 cents, a miss. Also missing substantially. They reported 408 million in sales. Analysts were up around 475. They also cut their guidance, and it was pretty substantial. They cut their 2026 earnings guidance to 275 to 310. Analysts are all the way up at 330. The sales guidance for 2026 wasn't much different. They also cut the guidance to below analyst estimates. Shares this morning are trading down about 10%, right around the $200 level.
Yeah, you know what happened when they had that government contract, and it was like 8 days ago, where the government put it back out. Everybody thought AVAV had it, and then they threw it back out there for bid. So that's the issue right there. And that was the big key reversal. The day the stock was over 300 that morning and ended up, remember, going down under 200. That was the day where, it all kind of turned. And momentum traders are now done with this stock. The valuation is still nosebleed here. I've been in and out of this a couple of times. It's been fantastic. I have a small position. My kids RESP still that I bought back at $120 way back in the day. There's a testament to trading and not investing here, because here you are, 120 goes to 400, and I'm back at 199. Is the kid going to give it all the way back? I'm not sure, but I try to not trade my kids RESP. I try to buy good companies at reasonable valuations. Back in 2025, I thought AVAV was pretty reasonable. It was. Now it's starting to come back off, and stories change. And I mean, the stock and the company itself is just out of favor here right now.
Low of the move, 196.22, and boy, oh boy, battle of 200 here. You do have some people bidding. Will it persist, or will it take out the low of the move? You talk about chop suey, Dennis. What are you just trying to incite a 25-point rally here as we are going into the CPI number? We got 30 seconds, Brent. Do you got a quick preview?
Yeah, we're going to be looking for core CPI month-over-month reading up 0.2%. This is for February year-over-year reading. We're looking for up 2.5%. Those are our targets here. About 10 seconds until CPI. We do have SPY rallying a little bit into this number.
Yeah.
Yeah, this number not reflecting current, current prices, right? I mean, we know there's a lag factor.
Rallying a bit.
Little bit light.
In line. Core CPI, 0.2% up. That was right in line. Year-over-year reading up 2.5%, right in line. The base readings, which include the volatile food and energy spaces, were up 0.3% month-over-month and up 2.4% year-over-year. Those were both also right in line. Market's reaction, initial spike over 6,800.
Did
This
we get that
again,
high? Yeah, you're right, Brentster. I took my eye off it. You did spike up to 60, just under 68.05, getting to 04.5. But what happened? Fader is coming
Chop
in.
Suey. We
Are
had
we
the name of the
surprised?
show right. This is more Chop Suey. We're just chopping around. I think this trend continues the entire day here. We're waiting for the next headline. There'll be 3 or 4 headlines to trade again. When you're a headline-driven market, this is how it goes. Chop, slop. Man, even on CPI, a lot of chop and slop.
Yeah, I think basically, well, you can look at just like, don't go to my 1 minute chart here, but I do on events like this. And we started this bracket at 87.25, and we went all the way up to 0450, and now right back to that area. So not much concluded here from the CPI data. Crude is a component of it. Energy, 6% of the total index, but is excluded from the core CPI. So just keep in mind, these numbers are not accounting for where crude is right now. We'll have to wait another month for that. So back to the red after that brief pop.
Back to the earnings reports here, because you know what? The market's not moving around. We don't have to stare at it here, just chopping around. Let's go up, serving up some good earnings here this morning.
Nice.
Serve Robotics.
Serve Robotics reporting a better than expected loss of 34 cents per share. Analysts were looking for 53 cents. Sales beat at 882,000. Guidance was really strong. They said that they're going to raise their 2026 guidance about $1 million. It wasn't a huge raise itself. They're expecting 26 million in sales, but the analysts were down under 24 million or so. So Serve report looks fine. Guidance looks fine. I mean, keep in mind, this is a very like early stage company. I don't know if that's the right phrase to say, but I mean, you know, when you report under, this is about as exciting as an earnings report can get for a company that reports under $1 million in quarterly sales.
Yeah, I mean, it's all the story here. I was actually, it wasn't a Serve Robotics, but I was actually at Eastside Mario's last 2 weeks ago before I got sick with the plague with my kids. And they had one of the robotics delivering the pizzas in there. It was going in there. The robot would come in. My kids were fascinated by it. They kept putting their hand by. They put their hand in front. I was like, stop doing it. And it would stop, wait for the hand to move, and then it would move forward. And, you know, it's got the little thing, and it goes and serves the pizza. It looks cool. Looks like you're in like some futuristic world here. So it's kind of fun. I mean, Serve Robotics is trying to bring this to you. So I think it's kind of exciting.
And they did, just on that note, they did also announce in a separate press release a deal with White Castle for autonomous. And I think the chart in Serve is interesting this morning. The price action was a little delayed. The price action was happening before the earnings report came out, about 20-25 minutes. People were bidding it up. And then after the earnings were out, the move was kind of like a little bit of a drift higher. And so I looked at that price action and I was like, that's kind of weird price action. I wonder if the stock has a high short interest. And as far as Michael Fian and I could look back, they had a short interest of like 25%. So this actually might have been a bit of a high short interest name.
A lot of things I could bring in here to tenants that we talk about on the show. And I'm going to do fundamental and I'm going to do technical. First is like the fundamental event anticipation, right? You had the CES in early January. You have the Serve Robotics robot coming on the stage, right? Right here. We rally pre-event run, $16. This is the greatest thing ever, right? Well, what I looked at is like, where did this move emanate from? Can it hold this major rally? Well, it started to pull back. It gave back half of that rally. Boom. Then it took out it filled the gap. Boom. So a catalyst-driven market, an event, it tops on the day of the event. I think it
We've
was the
seen that
day
happen
after.
so many times where they top out. Like we're
Right.
always saying, when you're doing catalyst trading, long ahead of the event, and then usually selling before the event begins, because the event is like an earnings report. It's like a coin flip. You don't know how it's going to go. People were pretty excited about it. I think it did pop up on the event there, but it's kind of like buy on rumors, sell on news. Serve Robotics was all of that back in January. It was a fantastic trade for a lot of people in the Stock Trader Network room. And the story has just cooled off here now. Now you have overhead supply. I mean, does that story get hot? It's a sexy story. It could get hot here again,
Robotics,
but we're just not in the tape for it. We're not in the macro tape for it. VIX starts getting under 20. We start getting, past the war headlines here. Becomes a stock pickers market here again. Right now, it's just not a stock pickers market because the war is controlling everything.
Okay, we got a special guest coming our way here, folks. Let's run the intro. Coming to the stage is Stephanie Lee, Chief Investment Strategist and Portfolio Manager at High Power Advisors. Stephanie, how you doing on this Wednesday?
Good morning. I'm doing great. How are you?
Good, good. Just trying to digest all this information in the market coming at us fast and furious. I had a brief discussion with you yesterday, and you're hanging in there. You're tough. You're not giving in to this volatility in the market.
No, I'm not. I'm actually looking for opportunities to buy. We always get looks like this every once in a while. Remember last year in April, we had Liberation Day, and the S&P 500 is up 36% since Liberation Day. So if you sold last April, that was not the right move. And I feel very similar to this situation. Sure, we don't know what's going to happen with the war, and everyone is wondering how long it's going to take. And look at what oil did just yesterday and just this week alone. It's been all over the place. But I do think you get opportunities to find companies that are best in breed that get hit just because the entire market gets hit. And so I'm looking to upgrade the portfolio into even better companies than I have. And that's kind of what I've been doing.
Let's talk about that, Stephanie, because I agree with you. I mean, you get these opportunities as a long-term investor where the market, sells off substantially and kind of throws everything down and gives you opportunities to get in those stocks. Where are you looking? What sectors and what specific stocks or names are you looking at?
It's interesting. It's a couple of different places. Like I've never owned Netflix, for example. So I actually added that. Now, I know the stock's had a nice run recently, but it's still down 26%. They're going to grow earnings at 20%, revenues 12 to 14%, margins are going to expand. And I like the fact that they're not going to do the Warner Brothers Discovery acquisition.
For sure.
I think that was a mess, right? And I don't even understand why they even wanted to do it. But point being is now they can resume the buyback, and the stock is trading at a 4 multiple point discount to its historical average. So that's one area. The other area, which is taboo, is software. And maybe Oracle's report last night will help software today, but I like Synopsys because they provide mission critical software to the very complex chip industry. The more complex the chips, the more you need Synopsys. And they made an acquisition, Ansys, and they actually, as a result, their total addressable market goes from 31 billion to 59 billion by 2028. So I like that as in terms of a tailwind. And that stock also is trading at a discount to its historical average. And so the only other place within software that I think, and I have a lot of confidence in, is cybersecurity. I have no idea why people think that AI is going to hit cybersecurity companies. I think because of AI, cybersecurity is going to be bigger than AI. And so, because AI just isn't secure. And so Palo Alto is a name that I've been adding to.
Valuations scare you though on a Palo or a Crowd, because obviously it's not only just been concerns about AI that have seen a sell-off in January and into February, but it's also been PE multiple contraction here, where we obviously saw a lot of money come from higher PE names to lower PE names. CrowdStrike, Palo, obviously higher PE names. Does the valuation scare you, or has it gotten to a point where it's reasonable enough considering the growth?
Yeah, I mean, Palo, you're right. On a PE basis, they're not that attractive because they do look expensive. But I would say Palo Alto is trading at 11 times price to sales, And CrowdStrike trades at 22 times price to sales. So now CrowdStrike is obviously the number one player. That stock is still very expensive to me, but that's why I've been adding to Palo Alto, because I think this stock, by the way, hasn't done anything in the past year. And I like the fact that they've made $30 billion worth of acquisitions over the last 6 months. And I think that this year you're going to start to see synergies as a result. And you have a company that's growing, RPOs are growing up 22%. Product revenues are growing 25%. Margins are expanding. So I still think that this is a place you could add to. And then, of course, the other area that I've been adding to has been the financials, because they're really under a lot of scrutiny, mainly because of private equity and the concerns there. But I like Truist. I like the regional banks. I think that we're going to get the Basel III endgame regulation rules, meaning they're going to be less stringent on capital requirements. So I think this company has almost 22% of their market cap. They could be buying back stock because they have so much excess capital as it is. So you get more regulation or deregulation coming. Should be at the end of this month. I think you're going to start to see more banks and increased buybacks, dividends, and of course lend out. And that's what we really want.
Why have the financials been hit as hard as they have? I mean, even looking at something like an American Express, 380 down to 300. The XLF has been a mess here, 56 to 50. And I've looked at, the recent, rally we had in software names. Financials didn't participate in that. They're all sitting down here near the lows. What is the overhang? Like, why so concerned with the financials? You think this market is?
I think that it's the private equity guys that are really under a lot of scrutiny, and we're seeing redemptions, and we're seeing higher than expected redemptions, and the marks that they have. No one's confident in private equity in terms of the marks that they're trying to explain anyway. And I think that there are a lot of concerns about private credit, but I don't think that is the public banks' problems. The public banks, they have so much more in terms of a diversification in terms of their revenues. And so to me, I think the big six banks are taking market share from the private equity guys because they can, because of deregulation and that sort of thing. So I think we just have to wait in terms of maybe the next catalyst being, I think, again, the Basel III endgame, which I think we're going to get the end of this month. And then I think you have to wait for earnings and listening to what companies have said at conferences, which just this week, there is a financial services conference. Bank of America yesterday was talking about 7% net interest income. They're talking about double-digit investment banking business. They're talking about the capital markets activity the pipeline is at a record. So to me, I think these stocks are very, very cheap. And I think that's why I'm adding to at least to Truist is at 1 times book value. I mean, that's crazy to me.
Yeah. Valuation's attractive on a lot of these names. Just continuing my AI thought process here, though. One thing I've been concerned about is the wealth management portion. Like a bank, you're always going to need banks, for obviously lending purposes and the traditional banking. But can AI start to replace some of these wealth services? That's what I'm somewhat concerned about. Like, so maybe you got to look at, who's obviously, where revenues come from on individual banks as well. But I think that's, also a concern is that AI can be your wealth manager here. You get your Gemini or Claude coming out, and who knows what Claude's going to do tomorrow. Do you have any concerns about the wealth management business of these banks?
Well, I think there's a push-pull for sure. I think that AI certainly is going to be disruptive in terms of the labor market in general, number one. But more importantly, I think people always will want someone to talk to about their finances. They want the perspective. I think the wealth managers can use AI to make them smarter and make them more effective. And also, if you listen to JP Morgan, Citigroup talked about cost savings. They're going to see $2 billion of cost savings just from AI this year. And that's nothing in the grand scheme of what they can do in terms of total revenues. But they are seeing lower costs, more productivity. Bank of America said that they're seeing productivity skyrocket, like up 10% because of AI. So I think, sure, there's going to be some dislocations, but I still feel very strongly that the wealth advisors can, again, get smarter, but then also be more holistic in terms of how they focus on their clients and not just like transactional. So I think you are going to see kind of a shift, and I think you're already starting to see that.
Stephanie, let's talk some hardware names here. You recently sold Teradyne. I mean, we've seen this run on Micron, the memory, shortage here, where Micron's went from $100 to $450, and SanDisk went from $200 to $700. And Teradyne has had a heck of a run too, going from $150 is back in November to $344 just, a couple of weeks ago here. Is this move overdone in hardware? Like, we've been selling software, buying hardware relentlessly here. What are your thoughts here on the hardware names?
Yeah, that's kind of what I'm thinking. Like, I was up over 100% in this name.
Great
And
move.
we know how volatile they can be. I understand why they're going up. I mean, they obviously have a huge part in the whole AI adoption and that whole thing. But I just couldn't justify the valuation. I would tell you, though, if this stock were to pull back substantially, I would certainly look at it again, because they have an interesting piece to the story. It's not just the chip story and AI, but it's also automation and robotics. And they're one of their biggest clients is Amazon. And we know what Amazon is doing in terms of robotics and that sort of thing. And so for me, I made a lot of money. I'm like, yeah, I think it's a little overdone. And that's why I've been adding to the software names.
What about Amazon? You mentioned Amazon, and this is as cheap as it's been in a very long time. We look at Walmart trading 40 times earnings. Amazon is 21 times forward earnings here now. As cheap as maybe the stock has ever been. Yet still can't seemingly to get it going here. Do you think like Amazon has its day in the sunshine here again, or is there something else happening?
I think they absolutely will, but I think they're in the penalty box because they're going to see negative free cash flow this year. They're spending all their free cash flow on AI. Now, I understand why. Get it. I understand the whole growth, and I understand that, the whole CapEx boom cycle is happening. But I think when you start to take, your free cash flow into the negative territory, I mean, that's one of the reasons why we own these Mag 7 names, right? It's because of the endless free cash flow that they have. And I just think that it's going to take time. Now, amazing company. I do own a small piece of it, but I will say I've been trimming it just because I think that there are way other better names to own, and other names that are not as crowded too. I think everybody owns Amazon at this point.
Awesome stuff. Stephanie, apologize for Joel. He had audio difficulties. He never has audio difficulties. I don't know what happened, but it started the interview. So I jumped in here. But Stephanie, pleasure to, I actually think it's actually the first time I've ever been on with you. So I've watched you on CNBC for years. So a little starstruck here. So thank you, Stephanie, for being on. Chief Investment Strategist at Hightower Advisors. We appreciate your time here this morning. Thank you so much.
Thanks so much. Have a good day.
Thank you.
That was funny.
Joel's still struggling with his mic. He might have it now. Joel, you're
It's
on
like a
mute,
big
actually.
reveal.
It's the old mute trick for Joel. He's been fighting it.
Button, man. I'll tell you that right now.
Your computer just blow up or what? What happened?
Nothing.
He fed the gremlins after midnight. That's
Stop
what happened.
feeding. Yeah, you can't.
You can't feed them after midnight.
No.
Oh, man.
Dennis, I laughed out loud pretty good when you were like, kind of starstruck here. Like,
I've watched her on CNBC
No, for real.
years.
Yeah.
Like, we see these, obviously Tim Seymour comes on, we get lots of people on, but I've never talked to Stephanie. She's great. She's so, like, I've always really respected her, because she's longer term. So, I'm a short-term trader. I've always been a great short-term trader. I'm not a great investor. I try to buy good companies, reasonable valuations. I try to do, but longer-term performance, my bread and butter's always been my trading. I've always been a better trader than an investor. So I like picking her brain. I like hearing, because that's her time frame, is like what I want to do for my kids, our ESP, my RSP. I want to hear what she's saying, She's confident. She's coming in, buying a few software names. I think she could be right. I think she could totally be right here. And, the hardware might be overdone too. So she's buying dips and selling rips too.
Joel, I just closed my trade station, by the way, if you want to pop yours open. I got a little notice that said someone was trying to break into my trade station. I mean, your trade station.
Yeah, what did you guys do to the market here?
It's just been steady leaks in CPI. And the market is going to, don't think for an instance that it's going to be, oh, we're in trouble here. They didn't like this CPI number. We're just going to go down all morning. We are in the title of the show, Chop Suey. We're going to go down 20. We're rally a little bit, probably fall to the 20. There'll be a headline. Oh my gosh, it's escalating over there. We saw mine, we're going to go down another 20. Then we're going to rally. And then Trump will come in and calm the markets because Trump puts there and saying, oh, yesterday was the best day ever. We really made a lot of progress here, and we think we're getting somewhere. With the timeline's going to be way ahead of what we thought,
Dennis,
and
how
then the
come I
market will
can't?
rally here again.
How-
That's what's
how
going to
come-
happen.
How I want to agree with you, but I can't.
Why can't? Were you going to ask him why you can't agree with him?
I just think he's way too damn optimistic.
How am I optimistic? I didn't talk bullish here. I just talked Trump putt. Joel hates optimism. He wants to be a bear. Are you on the wrong mic, by the way? Can you change your mic setting?
I
If
think-
you're still talking.
I
through your
think you're on
webcam.
the laptop mic.
Yeah, we
maybe.
can hear you through your webcam.
It's,
You're through
it's
your
fine.
laptop.
It's
It's
fine.
fine if you want to go with it. We
Don't
get
don't
10
worry
minutes.
about it,
No,
Joe.
I got it. I got
He
it.
can
I got
do
it,
this,
I got
Brett.
it.
He's like technical now. He can do this. He's not only good with the technicals on the charts, he's good with the technicals on
No,
the
I
computer
want
as well.
I want to
There he
know
is.
all this
There he is.
optimism, where this is coming
Squash the
from.
optimism. I want to see pain and suffering in this market.
Okay, that's
We-
better.
We
That's
do
better.
we do get the EIA. A nice little heads up here in
I
the
cough
chat.
when I
Thank
laugh.
you. We do get EIA oil inventories today at 10:30. And that is not a number that we here on pre-market prep normally focus on. We might focus on it today, considering
Sure.
what's going on in oil.
Sure.
10:30 a.m. EIA inventories.
Okay. Well, we'll watch for that too. Let's go rate a couple ratings here.
Here we go. Triple D. Which one you want to start us off with?
We'll start with Oracle rating here because
Okay.
Oh,
we always get Oracle. We already talked the stock, but we want to talk the ratings here as well. So we know the analysts are going to come out. They're going to talk stock. Price target raised at Barclays. Reiterated at Wolf. Evercore reiterates their outperform. JP Morgan upgrades the stock to overweight. Oracle reiterates their market outperform. No, sorry, not Oracle. Citizens. Price target raised at Bernstein. Price target lowered at Piper. Price target lowered at Stifel. So a couple lowering the price target. BMO lowered their price target as well because their price targets were nosebleeding out of here. So we get the 9% pop here. JP Morgan says, buy it now. Yeah, but you're buying the rip. Now, I can also say the Oracle has been so killed. Is there really a rip? You got to kind of really look and, squint your eyes to really see the rip here on that chart because there really isn't that much of a rip, even with the 9% pop here today. But so I'm not going to give them an F- for the chase because it's really still is in the gutter and it's still kind of a contrarian call, even though the stock's up 9% this morning.
Well, let's see what they have to say. Maybe you will upgrade the rating a little bit if you hear what they have to say. They say the firm, JP Morgan cites a 55% decline in shares since mid-September and Oracle delivering on its growth acceleration for the upgrade. Investor sentiment on Oracle has shifted from, quote, blind faith to widespread pessimism over the attainability of the fiscal 2030 targets. JP Morgan sees an improved risk reward against the backdrop of the investor pessimism. Thank you, Fly, for some of that color on the
I agree with that commentary, actually. The widespread pessimism is there. I own the stock and I'm pessimist about it too because I've been losing money on it. So I know Joel's the same way with it. So widespread pessimism for sure. I'll go with that. I upgrade him to a B because of the commentary.
Oh, there you go. It's like we need a rating for the timing and the upgrade or downgrade, and then we need a rating for the color because sometimes you have to ignore, JP Morgan upgrading the stock to an overweight after the stock just popped. Some of the color there, I like that color too. I would give that color like a B-.
There you go.
okay. And I'm gonna go with a different letter, and I'm gonna go with an H.
I love Joel's grading system.
You know how I'm giving it H?
I'm trying to think, Joel.
I'll give you another. I know you hate guessing games.
Give us
H-O-P-E.
I hope. I hope.
The hope trade.
Yeah.
We're in the hope trade. We've been in the hope trade before. Everybody gets in the hope trade every once in a while. I hope my stock beats. I hope that stock comes back and gets me flat. I hope that Oracle isn't going out of business. I hope they're not going to spend as much money as everybody thinks they're going to. And I hope this analyst is going to be right. Lots of things to hope about there.
Yeah,
good.
and you know, just another thing here. I'm just gonna go a little bit, you know, longer term here, because like to, you know, I could take the heat, right? Right calls, wrong calls, my acronym. I was so bearish this stock in this area when it had that pop. Didn't short it, didn't pipe woods, didn't do crap. When Dennis bought it at 300 or something like that, I was
Yeah,
shaking
that was a
in my
bad buy.
boots.
That was my worst buy maybe in the history
I
of
was,
my
and
long-term
I,
buys.
you know, there's no reason to argue with you, because you just keep coming back with the facts and keep
I like to
coming back
argue.
with things, okay?
Yeah,
And then you bought
yeah.
it again, and I'm like, okay, and it gave back more than 50%. So
And then I sold a whole
did.
bunch at a loss.
Yeah, you did, and that's when I bought some. I was a contrarian once
Yeah,
again, but that
yeah.
was a pretty good sell. So I'm in 2 layers so far. Not a big position in my portfolio. Data Anomaly can decide what to do with this.
There you
one.
go.
You know, I mean,
Look at
it's in
enters
their
the Elconin
portfolio.
family portfolio. The stock has an extreme trouble getting out of it because we know Lisa is the diamond hands. Of
Yeah,
all
it
time.
doesn't do any good.
When you enter a position, you got to know you're marrying the position. When Joel enters a position, it's a marriage because he's been in stocks, even in some stocks like 30 years. I mean, that's the way to invest, though.
Yeah,
That's
and
why
then
Joel's
like
a great
I'm called
investor.
an eternal bear, and I have nothing but a portfolio of stocks and
Because your wife.
Dennis,
a lot
this-
of conservative invest. Well, maybe it's just time for me to.
Yeah.
Maybe we should start having Lisa do the show. When
nice.
you can just buy
smart,
the
she's
dip and
nice.
everything. All right, let's do another rating.
I'll be the
Dennis-
trader. Lisa will be the diamond hands, and Joel will be the perennial bear. That sounds like a recipe for a great show. What do you else you got? You got another
Except
rating?
for
What are you talking?
Peloton. Except for, but I get no calls on being bearish Peloton.
I know you were bearish your own stock all the way down, so you were absolutely right, even though you lost a lot of money on it.
I
That
didn't lose a lot of money. I don't lose a lot of money in
Yeah,
anything.
Lisa lost a lot of money.
Lisa loses. I just get, I don't have that concentration. I do a couple stocks that I can't keep me up at night, but that's okay. All right.
Dennis, that area that Joel had circled on the Oracle chart, I'm pretty sure it's when he was on Options Unchained with CC, and he was like, CC, asking for a friend, but let's say you're long this stock. What kind of like put position would you do here? That was funny. Let's do Nike here real quick. Nike upgraded from equal weight to overweight by Barclays. They raised the price target from $64 to $73. Little color here. Nike's operational progress, financial inflections, and management's disciplined actions for the upgrade. The stock's risk reward profile has shifted favorably, creating an attractive investment opportunity. Barclays believes Nike's progress in inventory management, operational resets, and the focus on brand health and margin stabilization. So that's 4 reasons, provide a solid foundation for a more constructive investment thesis. The worst of the tariff and geopolitical risk may be behind the company. I kind of like that little comment there.
I'm going with the Joel Elconin rating system here, and I'm going to give it a G. I'm going to give it a G for guts. Because this is a gutsy call. Guts. This stock is in the gutter. Like completely in the gutter. It's a stock that cannot find its way. It's a stock that's been so mismanaged. It's a stock that's got competition all over the place. It has lost its mojo. Everything is going wrong at Nike right now. But today you get an analyst saying, okay, let's give it a break. We think the stock is bottom, a fundamental bottom they were calling for on Nike. Maybe they're going to be right. So I'll give them the G for the guts, but I'll tell you, I'm not buying Nike.
You give it a G. I was just going to go with a Hope Plus because I don't own it, and not taking on it is just, it's making a new low of the move. So that's the only thing, or did make a new low of the move. But Tim Apple liked it down here. So does his analyst here. So How much lower can it go? So, all
You'll
right,
be
we're
known as
gonna
Tim
wrap it.
Apple forever on this show. If we ever even get a chance to interview Tim Apple, I will call him Tim Apple to his face.
I think Brent started that.
I think so. I think I just had a slip. I think we were covering it live on the Insider Buys, and I'm like, Apple, Tim Apple. And then we laughed. Like, he's Tim Apple forever now.
Yeah, until he gets the boot. You were calling for that a while ago.
I started it. Like, I started on pre-market prep, and then CNBC literally later that afternoon ran a segment to Tim, and it was out of the blue. I'm like, so we know sometimes we have producers that might be watching pre-market prep
That's
for some
okay.
content there.
Hello,
Hi, CNBC producer.
Yeah.
Anyways, it showed up there, and then everybody's talking about it. Then there was an article written on it, and I was like, am I going to get Tim Apple fired? I'm like, that would be impressive. But, yeah, I think so. I don't think he's done a great job. I mean, the growth has not been there. The only reason the stock, Apple, has held up as well as it has been a multiple expansion story. And it's been a buyback story. So they've, just drove earnings share. Top line hasn't grown in years. They have not had a lot of innovation there. I hope they do. I'm actually long Apple stock for the first time in like 4 years. But, and I believe it's the hardware play that might help it. But I'll tell you, it's been, a place, where money's been okay because of the buyback story here, but that only goes so far. They need to start figuring out how to grow that top line. They better do something good with Siri.
When did he go to the White House and said he was building that $500 billion plant?
I don't know. Is that scrap now? The tariffs aren't supposed to go in?
Oh yeah, we have right. I think it was I thought it was like around 200. I think it was right
Maybe.
here is when
Was that like
Maybe.
summer?
Yeah, I think so. But you guys, I'm probably wrong on that too. So you guys can check that. Okay, let's wrap it up here on this wacky Wednesday. I'm just gonna give you the good news because I'm always so negative. And the good news is we're holding the low from yesterday. So let's hold that. After that, I don't know where the hell we're going. And I'd love to see us green on the session. Look for your marks on your futures, your stocks. That's it for today, folks.